that if we borrow from them, they take control over our economy.
Malaysia's economy performed better than expected in the first quarter, supported by strong domestic demand as well as investments.
Will Malaysia be a beneficiary of the chip wars or collateral damage?
Now, a strong recovery in services and manufacturing is fueling exceptional growth in the Malaysian economy.
The assets held by a central bank in foreign currencies, sometimes known as foreign exchange reserves or international reserves. These reserves often include gold and other globally recognized assets, in addition to foreign currencies like the US dollar, euro, yen, and others. The basic function of foreign reserves is to protect a country's financial system from outside shocks, while also easing international trade and commerce. The value of a country's currency and its ability to sustain liquidity are both protected by its foreign reserve holdings in times of economic crisis or changes in international markets. In terms of gross domestic product, Malaysia is the 5th biggest economy in Southeast Asia and the 38th largest economy in the world. According to the 2021 Global Competitiveness Report, Malaysia is the world's 25th most competitive economy. The market in Malaysia, which has just undergone industrialization, is free-flowing and government-driven. In 2020, the export value of high-tech goods from Malaysia is projected to reach $92.1 billion, making it the second biggest in ASEAN behind Singapore. Upon understanding the foreign reserves, let us understand how big Malaysia's foreign reserves are. Stay with us to find out. Successful economic diversification is a major contributor to Malaysia's large foreign exchange reserves. The country has reduced its dependence on a single economic sector, like oil or manufacturing, by diversifying its economy. Large amounts of money have been brought into Malaysia via exports thanks to the country's efforts to develop its tourist, financial, technological, and palm oil industries. This diversified income source helps to increase foreign reserves, which act as a safety net against economic volatility. Why is Malaysia growing so fast? Robust export performance. One of the most important reasons for Malaysia's growing foreign currency reserves is the country's reliable export performance. Electronics, palm oil, natural gas, and petroleum products have all helped the nation become a global powerhouse in exports. Due to its strong export performance, Malaysia's foreign reserves are constantly increasing. Additionally, Malaysia's status as a hub for regional international trade enhances the country's foreign exchange reserves, which boosts its export potential. Attractive investment climate. Among the most important factors in amassing foreign reserves is Malaysia's standing as a desirable place to park money. In order to attract foreign direct investment, the government has enacted investor-friendly policies, including tax rebates, incentives, and a well-developed infrastructure. This inflow of FDI not only helps the economy thrive, but also brings in new money from outside. The resulting increase in foreign reserves gives Malaysia confidence against future economic shocks. Prudent fiscal policies. Maintaining such large foreign reserves is a testament to Malaysia's responsible budgetary policy. The government has taken a cautious approach to expenditure and debt management, establishing budgetary discipline. With this methodical approach, Malaysia is able to keep its finances in check, avoiding the need for excessive borrowing and lessening the likelihood of an economic crisis. Foreign exchange reserves increase as a consequence of increased stability and consumer confidence in the economy. Effective monetary policies. Malaysia's monetary policies have been so successful that the country now enjoys an abundance of foreign reserves. Bank Negro Malaysia, the country's central bank, has taken responsible steps to control inflation and interest rates. BNM supports macroeconomic stability by carefully monitoring inflation, changing interest rates, and regulating variations in the currency rate. By taking these steps, Malaysia may increase its foreign reserve position and reassure investors. Regional and global financial integration. The country's foreign reserves have increased thanks to Malaysia's strong engagement in regional and global financial integration. The country is involved in both bilateral and international trade agreements and is a member of the Association of Southeast Asian Nations. These partnerships improve Malaysia's ability to participate in global commerce and investment. As a consequence, there will be more incoming foreign cash, which will help build up the country's foreign exchange reserves. The country's aggressive economic management has helped maintain peace and prosperity by drawing in a steady stream of international investment and revenue. Malaysia's large foreign reserve holdings are evidence of the country's economic strength and stability in the face of global volatility. How does Malaysia manage its foreign exchange reserves? Bank Negara Malaysia BM. Malaysia's central bank is in charge of the country's foreign currency reserves. Key elements of Malaysia's approach to managing its foreign currency reserves include the following. Objectives. Managing Malaysia's foreign exchange reserves is crucial to the country's pursuit of its stated goals of monetary and financial stability, support for the general balance of payments, and trust in the Malaysian currency. Reserve composition. The US dollar, euro, pound sterling, and Japanese yen are among the main currencies that are often held in Malaysia's foreign currency reserves. Depending on trade and investment trends, additional currencies may also be included. BM may also keep reserves of gold or other assets regarded as safe havens around the world. Reserve accumulation. Export revenues, FDI, portfolio investments, and external borrowing are all ways that a country might build up its stock of foreign currency. Reserves are increased when BM buys foreign currency with the Malaysian ringgit. Exchange rate management. The value of the Malaysian ringgit is maintained by BM interventions in the foreign currency market. BM may sell foreign currency from its reserves if the ringgit appreciates sufficiently. If the ringgit depreciates too much, on the other hand, BM may utilize its reserves to prop it up. Diversification and risk management. Malaysia plans to diversify its foreign currency reserves to reduce vulnerability. Spreading the reserves out among many currencies and assets reduces the risk associated with investing in a single one. In order to keep the reserves secure, liquid, and yielding fair returns, risk management measures are used. Investment guidelines. The foreign currency reserves are invested wisely by BNM. Capital preservation, operational liquidity, and adequate return within an acceptable risk framework are the primary goals of the investing rules. Investments are often made in highly rated securities and other similar secure and liquid products. Transparency and accountability. When it comes to its foreign currency reserves, Malaysia is as transparent and accountable as it can be. BM routinely reports on the size, content, and performance of the reserves via the publication and dissemination of relevant information. This transparency increases trust of the market and allows stakeholders to evaluate the efficiency with which reserves are managed. From rags to riches, Malaysia's gross domestic product fell from $100.8 billion in 1996 to $72.2 billion in 1998 as a direct result of the Asian financial crisis, one of the most important events in Malaysia's economic history. Gross domestic product in Malaysia did not return to 1996 levels until 2003. In 1997, Malaysia underwent a period of profound transformation. The Malaysian ringgit was the target of speculative short selling. The value of the ringgit declined from MYR 50 to MYR 4.80 per USD as the economy saw a precipitous decline in foreign direct investment and an outflow of cash. The composite index of the Kuala Lumpur Stock Exchange dropped from about 1,300 to around 400 points in a few weeks. A National Economic Action Council was established to handle the financial crisis after the contentious dismissal of Finance Minister Anwar Ibrahim. Bank Negara fixed the value of the Malaysian ringgit at $3.80 per unit of currency. It also completely halted trading of central limit order book counters, impacting 172,000 investors, mostly from Singapore, and freezing about $4.47 billion worth of shares indefinitely. Unlike other nations hit by the crisis, Malaysia turned down offers of financial assistance from the International Monetary Fund and the World Bank. Malaysia was less impacted by the Asian financial crisis than its neighbors Indonesia, Thailand, and the Philippines since it rejected IMF loans. In any case, GDP fell by 7.5% that year. In 1999, however, it bounced back and expanded by 5.6%. Massive government expenditure was undertaken to revive the economy, and Malaysia's budget deficits have persisted ever since. A strong rise in exports, especially of electronics and electrical items, to the United States, Malaysia's primary trade and investment partner, has been at the forefront of the country's economic recovery. Bank Negara Malaysia, the country's central bank, was able to maintain its historically low interest rate policy since inflationary pressures remained modest. With a GDP per capita of $14,800, Malaysia's economy has recovered from the Asian financial crisis of 1997 faster than surrounding nations. In a symphony of economic fortitude, Malaysia's foreign reserves stand tall, a testament to their diversified dance of industries. Robust exports as melodies of prosperity and the harmony of prudent fiscal and monetary policies. With each note, they compose a resilient orchestra, leading Malaysia towards a prosperous future on the world's grand stage. That's all for today. Thanks for watching this video. I really hope you enjoyed it. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.